The crypto market is about to explode. Look at how institutions are buying like crazy. And this is happening while the United States Treasury Secretary confirms a meeting between Donald Trump and Xi Jinping aimed at reaching a tariff deal. The US CPI surprises to the upside and comes in at 3%. And Donald Trump pardons Changpeng Zhao. These events point to a bullish Bitcoin outlook in the medium and long term. In this video, we'll analyze the charts of Bitcoin, Ripple XRP, and other cryptocurrencies. Let's get started. In recent days, the global economic outlook has taken a turn toward optimism. It all began with the announcement from US Treasury Secretary Scott Bessent, who confirmed that Washington and Beijing have made substantial progress toward a new trade agreement framework. This development could slow the escalation of tensions that had been worrying markets, especially after President Donald Trump threatened to impose 100% tariffs on Chinese imports starting November 1. Bessent explained that this threat worked as a pressure tool to speed up an understanding with China. Both powers now appear ready to discuss broader issues within their economic relationship. The announcement comes just ahead of the much-anticipated meeting between Trump and Xi Jinping, set to take place during the APEC summit on October 31st. It's a gesture of detente that contrasts with the more confrontational tone the US president had maintained only weeks ago. Markets reacted enthusiastically. Equities bounced, and the crypto sector enjoyed a day of relief. Bitcoin rose 1.8%, Ethereum 3.6%, and Solana 3.7%. A notable improvement considering that just 2 weeks ago, the announcement of new tariffs had crushed several cryptocurrencies, with declines in some cases nearing 99%. Investors agree that if the trade deal is finalized and the Federal Reserve also cuts interest rates, Bitcoin could set new all-time highs. And in fact, US inflation is sending signals that could support that scenario. In September, the headline CPI came in at 3% year over year, slightly below the 3.1% analysts expected. Although it represents a mild uptick from the prior month, the figure confirms that inflationary pressures remain under control. Core CPI, which excludes food and energy, also came in at 3%, its lowest level since July. This moderation suggests price increases are losing steam, which could open the door for the Federal Reserve to hold rates steady or even consider a cut before year-end. The release also followed a brief partial government shutdown, which had delayed publication. The administration moved it forward so Social Security could update cost of living benefits on time. All in all, it is good news for households and investors who are beginning to see the end of the monetary tightening cycle in the United States. And notice how US indexes jumped. We even saw a gap. Look closely at the size of the gap in the S&P 500, a sizable 0.86%. The S&P 500 and the Nasdaq are now sitting at all-time highs. We have been saying in previous videos that US indexes were likely to keep pushing upward. The Dow Jones confirms the same, also at record highs, and the fear index is finally back where it always should have been. We never believed Trump's threat to Xi Jinping. What we saw was outsized fear from retail investors, fear that is now giving way to a return to rationality. And in the middle of this recovery, another headline shook global finance. Donald Trump granted a presidential pardon to Changpeng Zhao, the founder of Binance. Zhao had been sentenced in 2024 to 4 months in prison for failing to implement adequate anti-money laundering controls on his platform. His release in September had already made waves, but the presidential pardon adds a new political layer. On one hand, it reinforces Trump's image as an ally of the crypto sector, a topic with growing influence among younger voters. On the other, it raises questions about how financial laws are applied in high-profile cases. What's clear is that the name Changpeng Zhao still carries weight, and his return to center stage could help revitalize both BNB's price and the broader crypto ecosystem, just as the market starts to show signs of recovery. Right now, you're looking at the BNB chart on the 1-hour time frame. Since October 23rd, BNB has clearly been appreciating in price. That headline may have helped BNB's quote at a specific moment in the short term, giving it a nudge, a temporary boost. But obviously, on its own, that news won't sustain the price in the short run. That doesn't mean we at Crypto Insight can't be optimistic about BNB's structure. Don't worry, we'll break it down in a moment. Meanwhile, in Asia, Japan just took a historic step in digitizing its financial system. The company JPYC launched the first yen-backed stablecoin, also called JPYC. It maintains a 1-to-1 peg with the Japanese yen, backed by bank deposits and government bonds, which helps keep it stable against the wild swings of the crypto market. Company president Noriyoshi Okabe called the launch a milestone in the history of Japan's currency and revealed that at least 7 companies are already interested in adopting it. JPYC also unveiled a regulated platform, JPYC-EX, to issue and redeem the coin under strict legal controls. In a world where dollar-pegged stablecoins like USDT and USDC dominate the global market, Japan is using this project to reinforce its
its digital monetary sovereignty, and competition has already emerged. Giants like Mitsubishi UFJ, Sumitomo Mitsui, and Mizuho are working on their own versions. If these initiatives succeed, Japan could become one of the first countries with a fully fledged national stablecoin ecosystem, transforming how digital payments, savings, and investments are carried out. JPYC, for its part, aims for issuance up to 10 trillion yen and to build a new blockchain-based financial infrastructure, marking a clear before and after for the future of Japanese money. Now look closely at Bitcoin's 1-hour chart. As you know from previous videos, we've been analyzing the possibility that Bitcoin and the broader crypto ecosystem have been building a bullish accumulation phase. You'll remember we had a creek drawn roughly around this level where we said the market was in accumulation, hence our bias toward continued upside in Bitcoin and crypto. Now I want you to focus on the following. I've updated my structures. Spoiler alert, I'm still, of course, optimistic and bullish on Bitcoin and crypto. But now you're going to see on the charts where we previously had a micro accumulation process. I've removed those and switched to macro structures. These now explain the recent bearish rejection we saw in Bitcoin and the broader crypto market. As you'll see, I think that move is circumstantial because we're still talking about a macro bullish accumulation process. Take a quick look at Ethereum and how we've updated the structure. Remember, it used to run roughly through here. Check XRP as well. That old structure helped us a lot to look for longs, so we thank it, retire it, and start working with the structure that's currently in control. Look at Solana. We've been working with this structure, and I won't remove it because it will serve us well as a proxy. I'll explain that in a moment. In BNB's case, we can't delete the structure. I believe we'll keep working it. I'm talking about the creek. You can see they broke it here, and in my view, they're now threatening to retest it. They won't just touch it, they could even pierce it, and that wouldn't be bad at all. For Link, we're keeping the creek where it was. Same with XLM. But notice, we're constantly evaluating accumulation processes. In Sui's case, we've lifted the structure a bit. You can see we're thinking about working a bullish accumulation process that could drive the asset even higher. That's what we have in mind. And if on top of that, we now see whales, large institutions buying Bitcoin while retail investors, who almost always get it wrong, are selling, then the thesis that we're in a bullish accumulation phase, the one we've been anticipating for days and weeks, still has plenty of strength. I'll explain it now, but first...
Welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
Using Bitcoin's chart, let's start working on the following hypothesis. After this bearish impulse, we have a corrective pattern. Here's the W, this is a weak Y, and we could now be experiencing a Z. And when it comes to Zs, maybe it's different where you're from, but where I'm from, it's not advisable to try to flip them. We're talking at the macro level. What I'm saying is that betting on an immediate drop could be a bit kamikaze. Instead, let's lean on the idea that the Z can keep developing, like a teenager in puberty who will eventually become an adult. But careful, regarding this bearish impulse, we keep saying this is its W, no doubt. Now, could this be the weak Y that warns us there may be some kind of potential pullback before we go looking for a Z? Don't worry, we have day-to-day mechanisms to assess how strong the thesis is to tell whether this is the Y or whether the Y sits over here. Because depending on where that damn Y actually is, we'll know if this, underneath it all, is a Z, in which case we keep rising explosively, or if we need a pullback first, because this is the real Y, then we'd go after a Z. I hope that makes sense, and if it doesn't, don't worry, it probably means you've only been watching Crypto Insight videos for a short time. Give it a little time. In my experience, you'll end up getting it, and your technical analysis will improve. Now, Ethereum would be setting up something very similar. Here's the bearish impulse, this is a W, and honestly, with Ethereum, we have much more confidence, more certainty that the Y has already played out. That would mean we're already in the middle of a Z, which supports the idea that we can stay explosively optimistic to the upside. We're seeing the same thing on the XRP chart. Bearish impulse, here's the W, this could be a weak Y, and now we're experiencing a Z. It's a Z that's touching a creek that could soon be pierced, allowing the Z to keep enjoying a bullish party. That's what we can see on Ripple's chart. And now, picking up BNB's chart, I need to explain something about the Z. If we say we're coming off a crypto-wide bearish impulse, generally speaking, where we have a W, we
may already have the weak Y. Everything suggests we really do. However, this isn't an exact science, and we won't always nail these analyses. But if we say we're now forming the Z, then if we zoomed in microscopically, before doing that, let me say this. If we're here within a Z, what we generally expect is for price to keep pushing higher. Now, zooming into this moment, remember the market is fractal and intraday noise exists. If we're saying we're in an accumulation process and that we're here right now, it's plausible that on lower time frames, we could see price pullbacks. That's where we'll analyze whether we go look for a zone of defense near the creek, a classic institutional move, before breaking the creek decisively and then continuing with the Z's bullish directionality. That's when BNB can serve as a very interesting proxy for the crypto market. And before I explain how important BNB's chart is for using it as a proxy, I want to share the following. You know perfectly well from previous videos that we've been bullish on the crypto market. That's no secret. And of course, the same goes for our Crypto Insight Premium live sessions. Check this out. When BNB's price was right here at this exact point, we told the community live that we had an incredible buying opportunity in BNB. Here's how we explained it. We see institutional activity. We see it clearly. Momentum can distort things a bit, but Lean said, totally agree. The institutions are buying here. They're buying. They're buying. And I like it when they stick a little toe out with a wick. That's a buy point. BNB right now is at a buy point. Right now. There's a scenario where price can take off immediately, where they haven't set the little trap yet, that one right there, and it just goes. That's a possibility. Ultra tight stop loss? No, we don't want to get wicked out. Look, BNB is offering a buying opportunity right now. Although yes, retail is buying at this moment, but here's the key. Institutions are buying too. Yes, they're buying, no doubt about it. The opportunity is there. It's true, we also see retail buying here, but if BNB starts to climb, retail will begin to sell, let me explain, and nothing will have really changed. Yes, BNB is buyable right now. The idea with BNB is that when they stick a little toe out with a wick, they usually make a quick micro pullback inside, and they did it here with a trap. I'm evaluating that this is a trap. If it is, then we're at a market extreme, because if this breaks, it will break with force. As you've seen, looking for longs in BNB at this price level right at this moment makes sense because we're identifying a market extreme. And obviously, if we were looking to buy BNB, we were doing the same across the entire crypto ecosystem.
I want to introduce you to our private Telegram channel, which is completely free. In fact, at the time of recording this video, we're also live streaming for the community. During these live sessions, we look for trading opportunities in the futures market. We focus on intraday trades, and within this community, members also share their operational ideas, what they're working on, and what they're looking for in the markets at any given moment. It's honestly very interesting. This community is constantly learning and improving. So if you're an active trader and tired of trading alone, you can join our community. It's very simple. The requirements are as follows. You need to be a user of BitUnix or BuyDFI, have deposited cryptocurrencies into your BitUnix or BuyDFI accounts with a minimum value of $100.00, and use this account as your primary futures trading account. In other words, you need to be actively trading. Once you've met these requirements, simply fill out the form displayed on the screen. It consists of just 5 simple questions, and we'll get back to you as soon as possible. I'm leaving you the BitUnix promo details and the Crypto Insight Premium Access form in the description and pinned comment of this video.
As I mentioned earlier, here we're analyzing the buy differential between whales and retail. Whales are acting very differently from retail, and as you can see, whales have been buying Bitcoin, not just Bitcoin, but the entire crypto ecosystem. Remember, this is the differential, but if we look exclusively at retail wallets, we can see, keeping in mind that retail almost always gets it wrong, retail is selling. Let me ask you, whose side do you want to be on? The retail crowd that almost always gets it wrong, or the whales who operate with far more advanced information than we have and who can bend markets to their will? I don't know about you, but I'm very clear about whose hand I want to hold. Look, this is Ethereum's chart. We can see whales buying and, once again, retail selling. Think about where retail started to sell. It's not that they began selling now. From this point on, they sold like crazy, trying to push the market down. Meanwhile, the market has done nothing but hunt stop losses and liquidate them obsessively because institutions clearly have other intentions. Now, look at Ripple, XRP's price. If you focus on the delta differential between whale wallets and retail wallets, whales are buying there too. And once again, speaking strictly about retail buying and selling, not by volume, but by count, there's no better sentiment gauge. Nothing is more real than this. We can see retail selling, and they're selling in Ripple too. Going back to the BNB chart, I'm going to explain how we'll use BNB as a proxy for the crypto market. Keep this in mind. Right now. We may be in a Z. Remember, impulse, W, weak Y. I'm still missing some follow-through here, but cross-analysis suggests this could indeed be a Z. That cross-analysis is what saves us. So let's assume it is a Z. That means we're in a Z that needs to correct heading toward the creek, the origin of the break. That level might be enough for a reaction to the upside, though I wouldn't be surprised if they hunt some liquidity first. And honestly, the volume profile doesn't help at all in this accumulation process because of how volume is distributed. So I'm going to remove it, but we must watch the boundary I'm marking, the defense zone. Therefore, as long as we see BNB reacting on the creek, maybe with a small trap, or even poking the defense zone with a potential trap, so long as BNB does not lose the $1,086 level, we'll say we can remain optimistic based on everything we've analyzed. Heads up, we don't have to drop that far. We could stop at stage 1, stage 2, or stage 3. We'll dig into all this in depth, as always, in our live sessions on Telegram at Crypto Insight Premium. Now tell me, are you looking for longs or shorts in the market? Explain why you're doing what you're doing. And if you found this advanced technical analysis interesting, hit like, subscribe to the channel, and click the bell so YouTube notifies you of future uploads. Good luck with your trading, and see you next time.